Hi everyone, this is Brian Yu with Tradetobefree.com, and I'm going to go over the trades that I took this morning and didn't take. You may have seen the earlier video where I talked about what was setting up this morning. And one of the ones we talked about was applied optics, and I was saying that if it moved above the pre-market highs here, above 101.50, that we might take a trade, and it may trend higher into the release. Unfortunately, the market pulled back shortly after the open, even after the really big earnings beat by Apple, and the stock never hit the entry point, so we never got into that trade, and it pulled back quite a bit. Yeah, almost shorted it down through here as it hit the VWAP and started rebound downward. The only problem is that Applied Optics is one of the top growth stocks in the market, and these trades tend to be pretty small overall, and you're shorting against a longer term uptrend. So the other stock that we looked at was Court, and we caught a nice trade on Court. And this morning we said if it gets above 1330, it could be a good day trade and also another entry point in a swing trading pattern. And sure enough, the stock, after a really big earnings beat, this was one of the best earnings beats that we've seen over the past couple of days. They have accelerating growth, not only in earnings, but also in cash flow. And so you can see here the stock took off. It went up about 6-7%. We added to our swing trading position here at 1330. We also took a day trade, and we got 25-30 cents off that. And then it had a second wave higher up here, and it actually went up to 1434 very quickly on a tough day for the market. The third trade was Illumina. Now Illumina got into that, started to enter the trade a little bit above here. I think it was around 192 was the first entry point, and then I added some more at 193 or so, and the stock went up another 1 or 2%. As it was pulling back, I noticed though that the price, when it opened up, it actually didn't open up high enough to really qualify for the earnings eruptions trade. So I actually got out of this trade early because I recognized that it didn't qualify because of the gap wasn't high enough. Still made about a 1% profit, but I got out through here, made about a 1% profit, and later on it pulled back, and then now it's consolidating. It's actually going to go up this afternoon, it looks like, and may hit that 3% target on the trade after all. So that's pretty impressive on a tough day for the market. The Qs are now rebounding pretty strongly as I'm recording this. But yeah, when I see that, if I jump in a trade and then I look back and say, oh shoot, I missed something there. It didn't really qualify for the setup. I've got a strict set of rules for a day trade. I want to make sure there's a good chance of getting at least 35% on a stock that's liquid, where I can take a big position size, okay, or small size, and it will work out, very likely work out either way. I've got a strict set of rules for that. And if I jump in a trade and I find out that I jumped in too early, or if it didn't quite qualify in some area, then I'll go ahead and just look for a place to close the trade. And that's what I did here. And, fortunately, it was a small profit. In these cases where you've got a stock that's not quite opening high enough for the earnings eruptions trade, sometimes these will work out. Sometimes they won't. Maybe 2 out of 3, like I've been saying before. In those cases, but not enough to justify a large position size. Unfortunately, just didn't gap high enough on this one. Yeah, I just want to also compare and contrast a couple of the setups that came up today that I think a lot of people probably jumped in on. And one is LNTH, and the other one is KEM. And I want to show you these two. When you have a stock that is opening below $20, okay, you've got these lower price stocks, and if they don't gap a lot, if they gap in that 4 to 8% range or so, okay, they're much more susceptible to this type of pullback and this type of sell-off after the open, in my experience. And I saw 2 examples of that today where, on the surface, it looked like a good earnings beat. And I know a lot of people like to just jump in on an earnings beat on the headline and, thinking that stock is going to go higher and higher, like Illumina and like Cognix that we traded yesterday too. But, if it doesn't qualify, the earnings beat and the stock doesn't meet enough qualifications, certain qualifications, we're not here to pump and dump. We're not here pumping penny stocks. We trade, top stocks, top growth stocks, stocks beating estimates with rising future expectations, stocks with a lot of liquidity, and stocks, generally over $20 when we day trade. Okay, so if you get a stock and a setup that's not perfect, but hey, it breaks a pre-market high here. Sometimes that works out, but a lot of times it won't. So this is a case where it didn't. Sure, it had a great long-term trend. Sure, it had a headline earnings beat. Okay, but if you dig into the numbers and if you look at the stock, its price level in this case was just over $20. If you look at the earnings beat, I think they missed either on the top line or bottom line, and it didn't gap that high, and there's no real pre-market pattern here to trade off of. So this is kind of flying blind here, jumping in this trade. From a technical standpoint, something like this I avoid, and this is the reason why. Okay, this had a almost 10% gap up, but not quite, and didn't have enough volume pre-market. Just kind of bouncing around pre-market, and bunch of tick marks, but no real pattern and not enough volume to really set up a technical pattern and something you can trade off of, with this little volume here. And again, it was either the earnings or the sales that missed expectations. So, you don't want to look at the headline report, look at a long-term chart and say, yeah, let's jump in on this. You want to look at it more closely, make sure it gaps high enough, make sure you've got a good pre-market pattern, and follow the rules in the earnings eruptions course, or stuff like this will happen. So, compare that to, Cognex yesterday was a real nice day trade. So yesterday we had a lot of volume pre-market. We had a nice pattern setting up before the open, and we ended up with a real nice day trade here. Okay. All right. Now contrast that with LNTH, which apparently had a great earnings report on the headline. Okay. But if you go pre-market here, there's no volume here to develop a tradable pattern. After the open, it broke the pre-market highs, which a lot of people just like to trade off the pre-market highs. But this one fell apart and pulled back with the rest of the market as the Qs were diving. So be careful out there and make sure you follow a good set of rules that works, time and again, and has a high probability of success. If a stock has enough volume pre-market, if it has a really good earnings beat and a guidance raise, it won't need a pump from someone to break the pre-market high and go. It'll make a nice move like Illumina today, and also Cognex yesterday. So keep that in mind when trading, guys, and make sure you have really good setups. So again, that earnings eruptions course is on sale, and it will be for another day or two. So go ahead and check it out, and I will talk to you again real soon.